Back to the SPY. We got to back to the daily time frame and what we got going on today. So as you can see, like I said, with the Federal Reserve happening today, things get a little wonky. Just a few minutes ago, you could see that price was way up here, and the wick was way longer, and now we're moving back down to the downside, man. So let's break down what they got going on today. The July 28th Federal Open Marketing Committee meeting, right? So it's also a 2-day meeting, so I think they're having some something speaking also on July 29th, man. So right now, we already got the results. Let's talk about that. I had some other stuff from last night that I was researching, but let's talk about the results. So the rate decision, right? The Federal Open Marketing Committee voted 9-3 to leave the benchmark lending rate unchanged. This marks the 5th consecutive meeting where rates have been held steady. So we talk about this is the meeting where interest rates get talked about. Are we going to raise them? Are we going to keep them the same? Or are we going to decrease them? 5 times in a row now they've said, hey, things are looking pretty bad, but it's not too bad. We're going to keep them unchanged. We're going to keep them the same, right? So the meeting saw a significant internal fracture with 3 regional bank presidents voting against the pause, right? They got the names here. I'm not even going to read the names, but all these bank members all dissented in favor of a 1/4 percentage point rate hike. They wanted a 1/4 percentage rate hike. They were in favor of that. This represents the first time 3 Fed officials have dissented in the same direction since September 2016. And last time they had a meeting, they had the dot plot, which is like the result of another few of the members. It was like 8 members total, and I think like 3 or 4 of them said, hey, you guys want to keep them the same, but I think we should also increase them. It was for the they was talking about the trajectory for the rest of the year. They was like, hey, we only gonna do maybe 1. They was like, we need to probably do 2 or 3.
Yeah,
I think it was cuts that they wanted. So that's what happened. You got anything to say so far?
Nah, you broke it down nice.
So economic assessment, right? So the Fed's policy statement described the U.S. economy as growing at a solid pace with stable labor market. That is true, based on the numbers that they're giving us.
Yep.
However, officials noted that inflation remains elevated relative to their 2% goal, driven in part by ongoing geopolitical supply shocks in the Middle East. So they want a 2% benchmark goal of what inflation should be, but we're like in between 3.5%, 3.75%. And a lot of it is, it doesn't make up of the whole thing, but the more they have this war going on, the more that oil and energy prices get spiked up because, it costs more to get that oil. So, and that goes into the inflation, causing the inflation to stay a little bit higher. In line with, so Kevin Warsh has a new approach, right? And he doesn't want to give any future guidance. So last time, like I was able to say that, hey, for the future of the rate cuts, these people disagreed on such and such. We don't get that this time. He stripped down policy statement, completely omitted forward guidance regarding future rate adjustments. He has repeatedly argued that detailing future trajectories limits the central bank's agility. So they're keeping rates steady again, man.
I feel like that's valid. I feel like that's valid just off the simple fact that there's not any let's call it expectations, right? You expect that if he were to come out with a like a plan necessarily, like, hey, this is where the trajectory where I see this going. Now there's an expectation that they need to get there, and if they're not met, markets look like terrible, right? If they are met, somebody has something to say about it that they didn't like. You know what I'm saying? We have I think that the way that he played it was a great way to go about it, just off the simple fact that it could be worse, as well as this is the 5th time that we've held the rates. So I ain't even finna give you no bullshit like, hey, we might be here lower, higher, low. You know what I'm saying? Mm-hmm. We ain't gonna talk about next time. We focused on right now.
Yeah, man. So that's the result. They say that's the result, man. They're just trying to keep them higher for longer. Everything's been steady, based off what they're saying and what they're giving us. But there is also, for the year 2027, a 52% chance of a recession. So
that's high.
The more they keep it higher for longer, right? not higher for longer, but steady, and they stay higher for longer and not really, doing anything about it, it gives us opportunity now. But, like Flash was saying with the accumulation and, we're up and down right now, maybe next year we don't get that up and down, maybe 2027 things to look a little rocky, because at some point they have to do something. It's going to have to be a hike or it's going to have to be a cut. Inflation and things are getting high. This war is going on, and it's still been going on for weeks and weeks and weeks. I mean, for months, right? So it's literally the whole year. So let's, however long that goes on, things look a little bit rough. But if things get a little rougher, the stock market may see a little rougher. You know what I'm saying? Like we was talking about with the midterms, 12 out of 17 years when they have a midterm, we end up getting a fall, right? Say we do get a crazy fall like we was talking about, and it's like 20%, because we still haven't gotten that all year.
Ooh.
Right, we haven't gotten 20% all year.
What did that put price?
And that puts price at 585.
We ain't been there since last year, June.
Yep, and that 585 price is where we ran up from June 25 all the way until January 26. So 585 looks like a solid number, y'all. If we end up wanting to take all this space out, give the market a breather,
real quick.
Wouldn't sound like the craziest thing, man.
Yeah, no cap. Just want to see what we talking about right here from this high. It's a 10% drop. Let me actually use that one more time. Let me see where that is for price. 15. And that would be considered bull market, right? Or bearish market? After anything after 10? Or is it 20? Exactly, like anything after 20?
You know what? Yeah, after 10%, you might as well consider bear market. You know what I'm saying? 20% is really bear market territory. But after 10%, you know what I'm saying? I wouldn't say we're technically in a bear market, but if it's looking strong, man, you might count on just us getting that 20%.
Yeah.
So
that's wild.
Yeah, man. So that's the SPY breakdown. That is the the FOMC breakdown, right, of the Federal Reserve and what they got talking about our rates and our rate hikes and the cuts and all the stuff, man. So
did you trade this morning?
No, never trading on the days we got this going on, man.
Yep.
You guys, that's a good. I'm glad you asked me that. That's good for you guys to know. I do not trade on these days. If you're feeling a little risky, you can go ahead and do that. But that's like gambling almost, because a setup that is valid on a regular day wouldn't be a valid setup on these days. As you see, we ended up, like I said, you want to pay attention to these levels. So we ended up working at these levels, ended up coming down today. We ended up coming past it, retesting it, going as low from 736 to 730. You could have caught that, you know what I'm saying? But as soon as you got here and you might have thought it was going lower, you got it. You got the profit's gone, right? Bounced off of 730 all the way up to that 743 level. So wasn't too bad today. Then you dropped, in the last 5 minutes, if you was, so you was up, you was down. That's kind of how these days do it, man. Real volatile.
Yeah.
So you gotta really be, if you do trade, you gotta be on the quick one too, man.
No cap.
How about you? You trading on any of these days, man?
Definitely not trading on red folder news, just off the simple fact that it's extremely volatile. And as soon as, remember how they used to play it? If you haven't been trading for a while, Jerome Powell was the last chairman of the Federal Reserve, and it got to the point where on his very first words, depending on what he said, kind of impacted the market to go either direction, right? And so with that being said, if somebody has the power with their tongue paused to do anything like that in the market, that is not a day where you should be trading and getting your money taken from you, because that is exactly what's going to happen. And you don't want that to be the case, man. Look, let me zoom in right here. Look. We was coming down, hitting damn near tapping this level, moving all the way down. what time is this right here? At 9. So the market, the meeting was at 11:30 Eastern time, I believe. Also, yeah, that wouldn't even be 9. But I was gonna say, it looked like crazy manipulation right here. Also, it did bounce off of this level, so that could be another. That could be another thing as well. But just how fast the direction flipped. You don't trade on. Hey, not financial advice. We not trading on red market or red folder news days. It's not the way to go. Even an orange folder, low key, depending on which one it is, not bust.
Yeah, man. So you got anything with the Bitcoin, whatever you want to break down for us, twin?